Hey, folks, just doing a quick sound check. Let me know you're hearing all right. That's the famous Runa pop. Yeah, Happy New Year, everyone. Hey folks, just coming up on full camera. Happy New Year to everyone. Looking forward to today. Another crazy market, to say the least. We're still a few more minutes. I just want to get some preliminary stuff going. Got the Runa going. So we've got two Runas today. So that's about 300 megs of caffeine, of clean energy. So this podcast is going to be powered by Runa. Um, Yeah, so I'm just going to, everybody's hearing me okay. Just want to make sure all that's happening. It sounds like it is. So just have some chit chat while the moon's filling up. And yeah, we've seen some wild stuff starting overnight. Very quiet. Okay, interesting. Okay, I know what that is. Thank you. Let me know if this is any better on the sound. Okay. All right, good. All right, I'm going to go to another screen because I keep forgetting to fix this screen. So we'll go over here. And this screen, this is not. So I'm glad we're preliminary, getting ready to go. We're going to go with this one. So then you can actually see what's going on. Okay, there we go. So anyway, we're going to go ahead and start to kick off. We've got about 120, 140 people coming in. So thanks everyone for coming. There's a lot to talk about. Craziness just continues. It's interesting that it's been almost a year ago. I was flashing back when I was getting ready for the show today, and just flashing back to last year at this time, we were seeing in the beginning of last year, about a week from now, we started to see a lot of sell signals come out, and sell signals both on a short-term and the intermediate basis. And you folks should know by now, those of you, I see a lot of familiar names. But what this channel is about, it's really about our process, our quantitative process, and all those things. And I cover the database every night, and our intermediate database right now is 78% long. So we own 8 out of 10 items and a 16,000, almost 16,500 symbols. We're long just about everything. And the daily videos, as you should know, are just kind of a perspective. And we saw quite a turnaround from last night when I did the video to this morning. And I made a comment that in the video last night, that we've seen these election reactions before, where we see these negative overnight reactions, and then we come in and the thing just completely reverses. Well, welcome to that scenario. It's right in front of us right now. Let me, while I'm talking here, let me put the live futures into the background here, so we can at least see the stuff trade. It's trading off a little bit off of the highs, but the scenario that's out there, this almost feels just like the presidential election. Remember, we came in, was very weak over the weekend. We came into Monday, gap higher, Monday, Tuesday, Wednesday, Thursday, 5 gaps in a row. You know, I've been doing this a long time. You can look at me. I'm an old dude. Been in the market since 1979, never seen a 5 gap move. And the S&P actually gaps a lot easier now because it's so top weighted. Now that they put Tesla in there, another huge stock, we're going to see gaps all over these charts. So we'll see if the old theories of technical analysis and gaps come into play, because they're literally riddled all over the charts for the last year. And we've just seen obviously some crazy movement. And I'm going to go through some things, and my goal for today is to cover some of my expectations as I'm looking for charts. We're going to be going through virtually every major market there is. If there's time at the end of today, I will go through and actually maybe do some individual stock analysis, but this is going to be more of the macro view of what's going on. And we'll go down between daily, weekly, monthly charts, looking at some of the trends that are unfolding there. And I think that's going to be important for you to understand from that standpoint. I think I can make this a little bigger, and it will show up on the screen there, just so, because I have the fireside chat here that I want to do before we get into the actual analysis. And the expectation for this year is growing amazingly bullish yet, and we'll cover everything. I mentioned in last night's video, I thought we might test a weekly low. That all looked fine, like a right thing to say last night, but we just had no downside. We opened lower. The NASDAQ was down, 1.5 plus 1.75%, just reversed. And now we're up 50 handles on the NASDAQ. So a lot has changed
very quickly. But I want to talk about this thing that you're all hearing a lot about, and I want to set this meeting up just a bit. And how many times have we heard about the Great Reset? And you can go back and watch some of the videos I did last March and April, if you're interested, because there's some comments there that I made, and I talked about the unintended consequences of what was going on was going to be basically a socialistic environment. And there's a number of terms that I want you folks to be watching for. And we've got a pretty darn good community that we built up through this thing in the last year. I think we're around 26,000 subscribers. And we all need to work together on moving forward and looking for keys of what's going on. And one of the things we're going to start to see, and we've already seen it actually, the stimulus payments are nothing more than universal income. And I talked about this last year, that we're going to start to see these type of things show up, and they're definitely happening. Now, it's interesting to the people that are starting to get that income, is maybe not the ones that actually need it, and we know that, and we know how the Senate and the whole government structure, they've just pretty much just drug their feet on getting any additional monies out to the people while they kept things shut down depending on where you are. I saw a comment from the UK that you folks are locked down pretty heavy over there, and it's odd though. I'm not going to go into any kind of analysis of anything other than the fact that it seems like the more lockdown there is, the worse the virus gets. So I don't know, maybe they should look at the strategy a little bit. It's sort of like it doesn't seem to be working anyway. But I had the opportunity to travel a bit by car over the last couple of weeks, and got to see what other areas of the country look like. And the area I went to looked just like where we are now, is in Texas for a couple of weeks, and there was no signs of lockdowns there, and people were reasonably normal. People were masked up and all that stuff. But what we're going to see going forward is a number of things that we're going to have to watch out for. And I think the potential for medical passports and the vaccines and travel could change, and who can travel and who can't travel. So we're going to see more of those type of things start to unfold. And these aren't necessarily negative things. There's going to be opportunities with companies and everything that's going on in what we're seeing around us. There's going to be opportunities. And, with all the changes in the government, everything that's happening there, you're going to see a massive amount of spending. And I've been talking to you folks for 6 months at least, with the Fed pumping money in, and what we needed was the stimulus or the spending side. You aren't going to believe what you're about to see on the spending side. I think just about every program you can imagine is going to get funded, and it's probably going to get fairly crazy. And the whole goal supposedly is inclusion and diversity, and actually it's going to be exclusion and lack of diversity, because there's going to be segments of the economy of these companies, and these cash flow that's going to flow away from, I believe, the gap, the equality gap is going to be the largest that you're ever going to see in history. It's just going to grow massively. So if I'm hearing rumors of $12 trillion, the Green New Deal, they're just going to start funding everything. And, they got control of everything one way or another. I won't make any comments on that. But regardless of that, this is what looks like it's going to happen. So we're going to see probably like a consolidation of wealth, all types of things. I know through some attorney friends of mine that do estates, there's all kinds of activity around estates and people moving assets around. There's just a lot of things going on right now. And it's important to understand, I'm an old guy. I came in after Jimmy Carter was president in 1980. Reagan came in and he changed all the tax laws, and all kinds of money started to move around. It's the same thing we're seeing now. There's going to be a huge shift in where money's going. Our job is not political. It's not any of that. It's to figure out where the money's going. I've said this for, the better part of 40 years, is our job is to figure out where the cash flow is going and then follow it and make money. And so at the moment, the capitalist mentality that I've had for all my life is still in play. And there's going to be a lot of winners and losers, and we've already seen a lot of this. The other things we're going to have to watch for in the economy is massive automation. There's going to be AI automation of just about everything that you can imagine. So we're going to start to see a big move, and that comes back and reverses back into the universal income idea. And so that's going to get really interesting. I think there's going to be a huge GMO boom, all kinds of genetic engineering opportunities. These are going to be things from an investment viewpoint that are going to start to flow, and I think that's important to understand as far as that goes. And and it's all about, I see a comment here, it's about MMT, right? Modern monetary theory. They're going, instead of taxation, this is interesting because this is going to be an evolving thing. So for you trolls out there, before you start trolling me, he said this, he said that, this is something that is going to evolve and change dynamically as we go forward. And as far as the cash flows and all of those type of things that are happening, we just have to pay attention. And that's the beauty of the environment that you folks are being exposed to here, is that I'm able to follow in our software over 16,000 symbols simultaneously in every sector, every group, everything. And so we have a handle on where the cash flow is going. And as I mentioned in my opening comments here, is that we have 78% or 8 out of 10 symbols that are in our database right now have long signals, which means they are trending to the upside. And so there's a lot of activity here as far as all this stuff goes. And this is not likely to change anytime soon. We're going to have to keep a close eye on any rotation we're seeing in the database, all those type of things. Something that I'm going to suggest, I wish I had time, but there's a book I read actually in 2000, 21 years ago, and I've been watching the world happening, but it was called Natural Capitalism. And one of the things they talked about was carbon credits. So you were going to make money for not producing carbon. You were going to get a credit from that. So I'm going to be watching for that. So if any of you folks out there see anything that starts to look like carbon credits, or people try and say, oh, you didn't produce as many carbon, so you actually get a credit, and they're starting to throw money around that, we want to watch out for those kind of things as well. There's a lot of things that I've been watching for a lot of years, and you folks know me for the last year, and I'll say this, and you don't know it to be true other than I'm telling you it to be true, but I've been really insightful in figuring out some of these big shifts over the years, and the vision that I'm seeing here is really going toward all these things that I'm talking to you about today. So I'm going to go a little deeper into this, and then we're going to dig into the charts and S&P and the spreads and all the different stuff that's going on out there, because I think this is going to be really this is a big deal what's going on right now. And the fact that we're at an ATH, an all-time high, really doesn't matter. Doesn't mean that it's going to top out. You're going to... Am I still live? Because my whole computer just shut down. I'm not sure what happened there. Let me know you guys are still hearing me. I mean, everything went bonkers over here. I'm not sure what happened. Okay. Yeah, that was really, really strange. But hey, it's 2021, right? So it looks like TradeStation is unhappy right now. It doesn't appear to be working. Something weird has happened here. So that may require me to reboot this platform. And in fact, I am going to actually take it and shut it down here. Just bear with me 1 second, folks. Sorry for the interruption. I was on a nice roll there. Yeah, so something's still wrong. Bear with me. Okay, sorry about that. I'll bring that platform back up here in a few minutes. But yeah, I hate that. I must have been hitting some nerves because YouTube shut me down for a minute. But all of these things that I'm talking about, we're going to need to watch. We're going to need to watch out for further signs of universal income, further signs of automation, and a lot of talk about jobs being replaced and a lot of things that are going to go on, GMO. And don't forget, my good friend, and I'm a big fan, you guys know, of Elon Musk. And Elon's got, I believe it's called Neuralink. I mean, that's another element where they're going to start, integrating technology into human bodies. I think I've heard it called transhumanism. That was a nice try, but you know what I'm trying to say. But the whole thing is just going to go crazy. And if you thought for a second that there was a bubble before, you're going to see probably another 12, maybe even see debt actually double from what you've seen in the past. So you're going to see things that you never thought you would see. Just about, matter of fact, we could go back, if we just look back behind in our rearview mirror in the last year, we've already seen things we never thought we would see, right? So this is one of those things where it's just going to get maybe not more bizarre, but this whole reset, it appears everything is in line now, from the structure of the U.S. government and who's going to be running it to the world governments, and everybody's like in line to reset, and we are the guinea pigs, and we're the ones that are being reset, and there's a group of folks that are doing this. I don't want to get too controversial here, but it's happening right in front of us, and we just need to watch for it. And from an investor viewpoint, we need to make sure we're paying attention to things. And as I made a comment a few minutes ago, I've been in a place where I've been pretty insightful of seeing things that were going to happen in this next level. And I've been around a long time. I've seen these things. Ray Dalio is too interested in predicting a depression and not seeing what's actually happening. You can be a historian. I'm a historian. I understand the markets, but history and the forward-looking markets have nothing to do with each other at the moment. There's no 1930. There's none of this stuff happening. I guess if you had to, this is going to be a great inflation. I saw a comment a few minutes ago that inflation is the poor man's tax. There's no doubt about it. The Fed has told us that we need to sustain a higher level of inflation. This thing is a master plan that we're just going to have not a lot of choice at the moment to do, but to watch it unfold. So, like I said, pure investor viewpoint, we need to make sure we're looking at and watching for certain elements. I'm just looking at my list to make sure I've got everything that I was, the one thing if you do check out that book, Natural Capitalism, it was written in the year 2000, I believe. It might have been 99. But when I read it, I thought, oh man, this is crazy stuff. Well, some of their timeline that they set up in there was wrong, but it's all happening right now. And the only thing we have to watch for now is a massive adoption of carbon credits. That's the thing to watch for. And when that starts to happen, then that book ends up to be a reasonable map. I'm going to actually revisit it and read it, because it's been 20 years since I read it, but a lot of things stuck in my head that I've been watching for. So very, very interesting from that standpoint. Excuse me one second. I've got some notes on the back page here. Oh yeah. So how could I go on one of these rants and not discuss the potential and talk about the fairy godmother, right? So we talked about the Fed, new administration, money being spent, MMT, modern monetary theory. So instead of taxation, they're just going to build debt and create money. The Fed, one of the funniest tweets I saw last spring was somebody said, how does the Fed create $4 trillion? And somebody said, open up spreadsheet, add zeros, hit save, close spreadsheet. That's exactly what they did, and that's what they're going to do again. They're going to create the money, and they've needed the mechanism to spend that money from a fiscal viewpoint. So there's, how many times have we heard Chairman Powell tell us they have lending powers, not spending powers? How many times? Every damn meeting we've listened to this guy, he says the same things. He repeats himself. I think the last meeting, it was 3 or 4 times he said that. Lending powers, not spending powers. And he keeps talking about the Treasury and all that. Well, he's going to have his old colleague, his old boss, Janet Yellen, rumor, is going to be it. I heard somebody throwing Bernie Sanders around as the Secretary of Treasury. Now, that'd be really interesting if that were to happen. But as far as I know, Yellen's going to be the player. Bernie's got the wrong mix. He's an old white guy instead of the woman in place, right? So he's got nothing. If you look at, and I'm not saying bad or good about it, I'm just saying Bernie's got the wrong profile to get that job. Okay, so all right, I'm going to attempt to actually start TradeStation back, and hopefully it'll come back up for us, and we'll see what happens here. I've got it on the other screen, so bear with me for just a minute, okay? I'm gonna put you. I'm just gonna go off screen for just a minute. Yeah, so Ronald, while I'm waiting for this thing to load up, I see your comment. I think it's valid on the debt deflation will occur before the asset inflation kicks in. But we're seeing, and that's one of the things we're going to talk about. I've been talking about this for a while, that the 10-year will go over 1%. It's heading for 120, possibly as high as 170. I'm going to go through a lot of details here in a minute. Yeah, and I agree, Michael. Bernie's not going to be in there. I like that theory you have for sure. All right, just give me one more second here, and it looks like things are coming back. I'm going to be really upset if one of my pages didn't get saved because I worked on it just for this meeting today, but that would be classic that happened. We'll find out here very quickly. Yeah, so while this is loading up, while this is loading up, it's just about done. And we're going to go into the analysis on the S&P and all of those things. But there's a lot that we're going to need to watch this year. Okay. Looks like I'm back up and running, just checking a couple pages here. Yeah, everything looks fine again. Sorry about that disruption, but we're going to dig into the technical viewpoint. I've got some notes here on the S&P. I've got some calculations. I wish I didn't have time to get some graphical type stuff to put together, but I'll probably cover this in the weeks to come. Yeah, the title of the book is Natural Capitalism. Let me just look at something here real quick, okay? See if I can get. Yeah, so here we go. I'm going to put it on screen for you. This is the book, but it's interesting because folks are referring. That was one of the other notes I had over here on my comments. Let's see if I'm in the way. Yeah, so you can see it. It's perfect. But this book is about creating the next industrial revolution, and I've seen what's going on right now with the Great Reset. All of these things that are happening right now is being called like the fourth industrial revolution. So if you go through all of the history of this country, you know we were a farming community that went to industrial, that went to service, and here we are at the next level. This is number 4. And this is, if any of us that have studied any economic history know this is what has happened here. And I think that, but this book is interesting because it laid out what's happening here. Yeah, it's really interesting. Like I said, check it out. Wish I was smart enough and I knew how to make money on the internet, because I would have an affiliate link, right? And we would, I'd make money on this, but that's not what I'm doing this for. You know, if you want to support the channel, then you should simply go to and sign up for WaveTech. And we had a great WaveTech meeting. I know it was broadcast on YouTube yesterday, but there was a guy that I met through WaveTech, through the channel, that had blown himself up pretty good. And he's actually come back by using the software in about 3 months maybe, and he's back to whole, and he was down some big numbers, and it's very impressive. So I'm really happy for him. But if you want to support what I'm doing here, that's the way to do it, and yeah, that's an advertisement. I got trolled really bad on Twitter last time because somebody goes, this guy's a fraud because he's selling a software. That's what I do, folks. That's when I come up and tell you I want to help you manage your portfolios and protect your wealth. I can't do it talking on a YouTube video. We have a quant software, and I know there's another one. Wow, is that true? Amazon, $122. Wow. Yeah. I know, you know who I'm talking about, don't you? Thanks, Brett. Appreciate it. But listen, this book, I'm actually, this might become a subject because there's a lot of things. I can't believe they want 120. Let's see here. Let's click on buy the book on Amazon. They've got it on Kindle for $11.99 here. Okay, so maybe that was a misprint. 122 paperback, $6.83 to $11.99 on Kindle. Hardcover, up to $34. So you can get it on the Kindle for $12 or buy the paperback. And do they have audio? If they did, that would be the best. I don't see it on. But anyway, I think it's worth a read. And for you folks on the channel, then comment about this if you get this and read it. And because I think this is the theme of what we're looking at. And that's why I want to start today's show with this, talking about this stuff. And we can look at technicals and look at charts all day long. But what's happening behind this is really going to help us to determine exactly where we're going to place bets. That's what it's about. It's not just, it's not about, favorite stocks. It's not about those type of things. It's like, where is the rotation going to go to? What are the new companies that are going to come in to play? I've seen a number of things that are out there. And to create $1 billion company now is a joke when we have, 3 or 4 $1 trillion companies plus. We got a $2 trillion company. So, $1 billion company, I mean, that's like what a $1 million company used to be, right? And, so anyway, I think I'm done with that. Let's get the charts up. Let's go full screen and see. I think I can reduce down just so we can get that there. But let's start to dig into some of the dynamics of what's going on. Let me get my S&P notes. We talked about the Great Reset, the fairy godmother. So Jay Powell has a partner now that they can create and spend money. So that's something. Yeah, so I did have a note here. The fourth industrial evolution. So this is a big, big deal. So remember, I'm going to go through it again. Universal income, medical passports, consolidation of wealth, massive automation, GMO boom, genetic engineering, right? That's going to be huge. Neuralink, there'll be other competitors to what Elon Musk is doing with Neuralink. And carbon credits. That's probably the one thing that we need to watch out for the most. Okay, so let's start to, so this is my plan that I have for today. So I'm going to go through S&P, NASDAQ, Russell, MDY, the spreads, crude oil, Bitcoin, dollar, and then interest rate and the yield curve, and of course gold, and we'll do silver. So we got a lot of work to do. I'm into this thing only about a half hour, so that's good. I didn't get into a longer rant than I already did. I had a couple technology inverted. But anyway, yeah, so let me know. Let me know what you guys think when you read that book. I'm going to have to dig into it and refresh my memory. Most everything that I'm recalling. It's interesting because they called for hydrogen cars, not electric. And they did talk exactly, when you read that book, you're going to see that they were talking exactly about the way a Tesla's made. It's basically was a cart. The only thing that they did talk about was you're going to have local centers, and you just go down to their plan. An idea was you'd go down to some local garage and you'd tell them what kind of body style you want, and they'd build it locally. Maybe that'll still happen. Maybe the timeline is wrong, but it's going to be an interesting read, and I'm looking forward to maybe having a chat. So So, yeah, disruptive technologies. I've told everybody, I mentioned it on the WaveTech meeting yesterday. I have a two-part video coming out. First part is a discussion with Kathy Wood from ARC, and I'm interacting on screen, not with her directly, but on video. The next one is going to be called the rebuilding of ARC, and I'm going to show you some things with our software that I did that just about double the returns that ARC has made, and in some cases it's even bigger when you go longer term. So I'm going to show you how to take technology, take what Kathy's doing, and what she's doing. The one thing that I will tell you that Kathy will, when this thing rolls over, Kathy's going to lose money. Everyone's going to lose money. What our software does, it's going to sell out of a lot of those assets. It will stop the bleeding, and that's the key thing that happens. So, anyway, let's go ahead and dig into some of these charts. Now, we've seen today, we went, I think, an S1. Let's see what we got going here. From a range for the S&P today, S1 was 3701, so low. This is futures. S2 3682. I mentioned that in the video last night. I thought we'd at least get to an R1. Well, we blew that off, and we went almost. The high's been 74. We went right to an R3, and it's trading there right now. We're 100 points off the high. So we retraced for a few minutes, but came back up. But as we start to look at this stuff, all of a sudden, all the PPMs and stuff that I talked about last night actually have reversed. PPM 1 has actually cut through its first, second derivative. Everything's turned up with this rally today. So all of a sudden, a refresh. We had the big reversal on Monday down. We had an inside day and a higher close yesterday. Looked like we were going to at least test yesterday's low and possibly Monday's low. None of that happened. And like I said early in the conversation, I really think that what we're seeing here are the same players that showed up at the last election, and we got those 5 gap trades in a row. And we literally saw Monday, Tuesday, Wednesday, Thursday, and Friday, all higher opening, all gaps. And like I said, just to kind of tie everything together from what I said on the opening comments, is that what we're seeing here is there's a lot of gaps around these charts. Now, the futures don't have the gaps. When I bring up the cash, you'll see that. But let's just go ahead and bring up SPX. And you know, there's just holes all over this gap. Some of them been filled, some haven't, and especially when we go out to a weekly chart, we're seeing a couple things. And I'm gonna I did a calculation here, just make sure I'm kind of in a mad scientist mode at the moment. Here it is. I just want to make sure that I did a calculation here that I will discuss here in a minute when we look at the monthly chart on the S&P. But these numbers are crazy, and I wouldn't be, one of the questions I had in my opening comments that I wanted to propose, what would how crazy would you think if I said the S&P is probably going to 10,000? You'd think I was pretty crazy. All of the things that we're talking about, the pumping of the cash, the partners in spending, the fairy godmother, all this stuff, this thing is going a long ways. That doesn't mean it's going in a straight line. There will be corrections. There will be things that happen. There will be points that the right questions will be asked, and the markets will have to answer them at some stage. So nothing's going to change from that standpoint. But I mean, there's some. I'm going to show you a couple calculations, and I'm going to put a timeline on this to a point, a general timeline on what I believe is going to happen here. Now, this is the weekly SPX, and so far the weekly, what we're seeing is R2 is 37.88. We've traded up to 37.83. So we've already went R2 weekly. It's Wednesday, so that's okay. We've got lots of news coming out. We had ADP. This is somewhat funny, I guess. Irony funny is that we saw the ADP numbers come in negative for the first time. So is the employment numbers going to be absolutely terrible as well? Very possible. They're not always correlated, but we're also going to get the continuing claims tomorrow. We're going to get, claim numbers. It's going to be interesting to see if all this stuff is spiking. And I saw another one of those articles or a cartoon this morning, something about how disconnected the economy is from the markets. And, that's a popular theme. But when I show you that this has everything to do with the perception of the things that I talked on the opening comments about is, all of everything from universal income to literally massive new industries around automation and ultimately the carbon credits. We'll see how it all plays out. So let's go to the monthly, and I'm going to build this out and put a couple things in play here. And I'm going to do my best, so you have to bear with me. I'm going to take a couple things off the screen here just to I just want to turn some things off so we can look at. We don't need the ppms at the moment, so we're going to turn some stuff off here. I'm also going to turn off the let me get rid of the market grid on here. So I want a pure look at this thing. And when you start to see some of the elements I'm going to show you here, it's going to be very interesting. Yeah. Yeah, I see a comment on Bitcoin. I think it could go over 40 before you see a correction. We'll talk about that shortly. Okay, just to keep going. All right, I just want some, one more thing I'm going to do here is just so we can start to, I want to draw in some things for you folks as I talk about some of these elements. And this is going to be crazy time talk. And I should find plenty of trolls on after this live stream today. But this will be documented on the channel, so we'll go from there. Let me just do one last thing here. All right. All right. So what I've done is I've changed the grid up as far as I got rid of the grid. I got rid of the indicators. The only thing I have on there is some moving averages and some that's it, and some bar charts. And I know a lot of folks are into a lot of folks are into candlesticks. I'm not necessarily a fan. I'm an old school guy. Like just bar charts. Just need to see the range and see the configuration. And what I'm about to show you is somewhat crazy, and I'm only going to show you what I was able to come up with, and I'm going to draw this stuff on screen for you so you can see it. So in this whole pattern, matter of fact, I need more of this, but I'm going to draw the last part here, and I'm just going to draw what is potentially going to happen here. I saw this earlier last spring. I remember when I was talking about the trolls came out in masses last somewhere around the June highs or so, maybe in July. I was seeing these projections into all-time new highs at the time, and it just seemed crazy and stupid to even say. But now what we've done here, and I'm going to tell you the numbers. I won't be able to put them on the screen here. I don't have a way to. I need a better tool. If any of you guys know a really good tool to mock up screens and be able to type and do things, let me know. Tell me in the chat. Now I'm sure Jay, if you see it, grab it. But there's a couple things here I want to talk about. This little move right here, there a couple things is that it's potentially a wave one of something larger. And this is the length of this sequence, this first wave up to here was 1,719. We had a low last year at 2191. The top was 3588 was that top as it made an all-time new high. The retracement's minimal, and since we were able to make this new high and start to project out, there's a couple projections, and I've been doing these projections for a very long time, and if there's the considerations looking at things from an Elliott wave viewpoint is that the next leg, there's just a swing objective, right? That wave one and wave three equal to each other. So that would be that this wave I've drawn here would be the same length as the first wave, which would be 1,719 points long, okay? That would be the full-blown, that's just the swing objective. We could go in and talk about Fibonacci objectives, 1.382, 1.6. We're already talking about 4,500. I don't see the point in talking about that at the moment. But this is actually something very visible. And when you start to look at most of the projections that I've seen by the so-called analysts out there have been 3,800 to 3,900. Well, we're 3,800 today, and this is, the 6th of January. So those numbers aren't going to be right. So this is more than likely the next 12, maybe 18 months could be the extension. But here are the numbers. That number of 1,719 points, the low that I right here was 3233, and that projection then puts us at 4952 roughly. Okay, so the other thing that I will do if this is some kind of wild ABC irregular corrective phase, which it doesn't appear, that I'm drawing a line in here, and what that would represent, that this would be a 0.618, that this next move would only be 61% of the first move, and that is 1,062, and that would be 4295. So I'm going to put my objective for this year at 4295 to 4952. I know that's a wide range, but for the moment, it's just a projection into the sky, thinking here's where things could go. As we see more structures, I see things unfold in the months to come, we're going to be able to get a more accurate read on what the probabilities are. But this is a big move. I didn't figure out what the percentage gain from the lows would be, but we're talking 40, 50% on the upside. So these are very big numbers, and I also would put them at a 12 to 18 month range right now. you're looking at these bars. It's going to take a lot of bars to get there. But depending on what we're going to see, we got Fairy Grandmother, we got the Fed. They're going to restructure all of the economies and everything that are out there through everything. I'm tying this entire live stream together on this scenario that I've been talking about from the standpoint of what's likely to happen on this great reset, about the monies they're going to pump in and what the possibilities are and what areas we're going to need to watch. So, you know, I've got that set up pretty good if you've been watching since the beginning. If you haven't, go back and watch the replay when that comes out, and we'll be hopefully got a decent timeline on where to map things out, and so you can find things easily. But this right here is for the S&P. I didn't do the calcs for NASDAQ or any of the other markets, but I wanted to get this out there on the street because this is a big projection, and it has everything to do with inflating the markets in a big way. So somebody made the comment that inflation is the poor man's tax. Well, if you're able to play in the markets, and you know the playing field has been substantially flattened with the world of fractional shares. So I believe Charles Schwab has them for retail. You got Interactive Brokers, you got Robinhood. There's a lot of places where you don't have to have a lot of money to participate in this thing, but you definitely want to have it. I remember just a few weeks back when I said Bitcoin was, I did the video, Bitcoin to 23,400 or 500, whatever the number was. And of course, you know, now we're looking at Bitcoin at 35, almost 36,000 right now. And, you know, I think we're going to go through that scenario in a minute. And the other thing, and I'm still working on all of the moving parts as far as how how things are going to come together with the US dollar, the MMT, Bitcoin. There's a lot that has to be looked at here because many of these things have just flipped on it. You know, the coin's been flipped, it's come up heads, and it's a go. So there's a lot of things that are going to need to be looked at, and over the course of the next couple months is what I'm going to be talking about. These are themes that are most likely going to be coming out a lot of the videos and things I'm doing. The beauty is, for instance, if you have WaveTech, the GTBC, if you bought the Bitcoin was bought it, you know, a long time ago. You know, I think it was, I forget, 13,000 something. That's where we got the buy on Bitcoin. It's still long. It's not even looking like it wants to get out. And so there's the trends, all of these trends are in place. They don't reverse easily, especially when you start to look at these monthly graphs like what we're doing right now, because this is a serious move. Now I'm going to go back in before we move on. And I'm going to turn on the PPMs again. And these numbers are crazy. Okay, so PPM 1, 3.66, 1.26, and 1.06 on PPM 3. And what these PPMs do is they measure what we call price pressure momentum. And what it tells us is what the probabilities of markets going below the moving averages, which I use 10, 21, and 40 simple moving averages. And I know they're a long ways off, but it's more about the underlying trend. It's more about the upward pressure that I'm talking about. And when we want to fine tune it, we don't have to use exponential. We just change the time series of charts that we're looking at. So we're looking at monthly, we can go to weekly and daily, and we can fine tune all this by using the PPMs and using the different time series, going shorter in when that's happening. So, but all of these things are just crazy off the map, confirming everything I just told you, that there's a very extremely long-term secular trend that looked like it was ending last March to flipping the script. And we all know that it had everything to do with the Fed and the fiscal spending that came in, trillions of dollars. So this thing is being engineered. You can hate it, you can call a bubble, you can do whatever. My goal is never hate the markets and what they're doing. Participate with them. That's really what you want to be doing. You don't want to be trying to fight. In the old days, you say, don't fight the tape. No one even knows what the tape is anymore. So the point is that you want the trend. My old buddy Lou Horowitz used to be a president of the New York Futures Exchange. Exchange hasn't been around for a long time, but Lou always said the trend is your friend. Never too high to buy and never too low to sell. And we've certainly seen that adage actually play out quite a bit. All right, so let's start going through the next market I'm going to go through. Let's go to the NASDAQ. We'll do Russell. We'll look at the spreads, and I'm going to buzz through all of these things pretty quick and get off the screen here. So we're looking at the NASDAQ composite cash, 12,842. This is monthly. Let me go back and let's do daily real quick here. And I also want to put on some of the studies back on. We're going to put market grid back on. I also have the a cycle finder, and the last cycles that came in was back on November 30th was a bottoming cycle, so that's still in place on a daily basis. But from the viewpoint of the composite, looking at the cash, we can go over. Let's flip over to the futures since I cover that every night. They in spite of the rally back that we saw. We did see we're actually getting a massive sell-off as we speak right now. We're selling off heavy right here. But the daily NASDAQ futures still look to me that we're going to be locked in a range. We're not going to break out of here. So that sets the spreads up and the Russell and actually the mid-cap stocks as well to be still the place to play. And that has everything to do with higher interest rates. It has everything to do with what I'm calling the recovery trade, which is that rotation. I started talking about that rotation into the small caps. You can go back and validate. I believe it was in July. I started talking about that, telling you folks, and I'm going to show you a couple of trades. I showed you a very aggressive way to play that, which you were going to be like long the IWM and short the NASDAQ. I'll show you the PSQ, I think it is, against it. That's a rocket ship trade. It actually worked so well. It's amazing. But what this chart is telling us is that we're not seeing, even in spite of this big reversal that we saw earlier, now we're pulling back into the range here, is that we're not seeing, I talk about this a lot, it's an old term we used on the floor, is the VIG. There's no real momentum that's coming out of this thing going on. Yeah, so the recovery trade, that's a great comment, won't be consumer driven. No, it will be the restructuring of everything which will drive it. Let's go over to a weekly time frame here on the NASDAQ. I'm gonna go through this. I'll take a look at your comments. We're down 105 now, down 0.82. All of a sudden, we're trading back at the toward the bottom end of this thing. Let me go here. So we're looking at last 12,686. We're trading below S2 all of a sudden, almost down to S3. So massive reversal. I don't know if you guys have heard what's going on out there. Just let me know if there's any news, because I'm trying to focus here. I'm not really looking at much. Yeah, I guess maybe some comments out of the, yeah, I don't know what's going on. So I'll let you guys, yeah, gold I'm sure is reversing. Yeah, well, that might be the counter trade here. But anyway, what we're seeing here on the NASDAQ is actually the moving back down. We go to the monthly. This chart isn't set up really as bullish as the S&P is. And certainly when we take a look at the mid cap and the Russell, you're going to see that that's not, that also has a different configuration. So let's go ahead. So I cover this every night. You can see what's going on here. So let's go back to the daily. It's interesting because the Russell has pulled back a bit. But look at the Russell on the market grid. It's just blowing up through here. So maybe we're going to get an RXT sell if you guys are familiar with that. Yeah, so, yeah, that sounds about right. U.S. Capitol taken over by protesters. Wow. That's pretty crazy stuff, right? I wish I would could be politically incorrect, but I'm not going to do it. I'm not going to get shut down by our friends because I've got an opinion of what's going on here. And it's not an opinion, but I think I've got some insights on what's going to go on. Maybe we'll do a Zoom meeting. And if you guys want to sign up for an email, we'll send out the copy of the Zoom so we can actually get that out there. But the Russell is blowing up. We're still up 4.12. The weekly is also above its extreme right now. And the monthly is within the monthly parameters. The high has been today 2079. R2 is 2088. So we almost traded an R2 monthly on the Russell. On the downside, we traded basically an S1, 1921. Low was 1927. So that's going on. Let's take a look at some of these spreads. Yeah, I'm so glad I reconfigured this chart so we could see everything. This is the trade that I mentioned, going long the IW. That should be M, not N. Let me fix that while I'm thinking about it. IWM versus the PSQ. So you're short the NAS and you're long this thing. I've been talking about this trade going back into October, November. This was the place to put it on, and it's skyrocketing right now. And this is a real-time chart, so it's updating real-time. We look at the Russell versus the NASDAQ. This is the trade I've talked about for a while. This is the daily. And this is the beginning phases of this scenario. This is the weekly chart here. Just trying to get this so this isn't in the way. This is the weekly chart that's out here right now. This thing's exploding. I think this thing is going huge. I've mentioned this before, but I'm an old spread trader. We used to do a lot of spread trading in the banks. And, you know, this spread's got a long ways to go. So this rotation, leadership change that I've been talking about is going to continue. Matter of fact, let's just put the monthly up. You'll see what the beginning of this turnaround is. This is monthly. This thing has been going down literally since 2009. And so we're going to see a recovery at least back to 2015, 16. And, you know, there were some things. There were some things that that happened in 2014 and 15 that really accelerated this entire process. You can see this is where the spread broke down. If you were trading then, especially those of you that might be watching our institutional players or clients of ours on an institutional level, it was almost impossible to make any money in 14 and 15. Even our good buddy Ray Dalio lost money then. There was no way to make money, and if you compared yourself against the S&P, you got destroyed. And the scenario back in 14 and 15 actually was, that scenario was the more you diversified, the worse you did. So you could own the S&P or own the S&P at the time. If you put anything else on, your performance just dived until the point where you got super, like most advisory firms, the way they position themselves, just got destroyed. They literally lost money and while the S&P was going up. And so this was the beginning of something got broke. And I talked about this many years ago, 5 years ago, 6 years ago, that something was broken then, and this is where we saw this massive divergence to the large cap stocks, and the mid and smalls just were off the rails, and they weren't going to come back. And this is the illustration. This is a long-term monthly Russell versus a NASDAQ. This thing is going to recover. Is it going to ultimately lead and go into this big bull trend? I'm not sure about that. But the recovery rally of this spread isn't done yet. There will be, this is probably a 2-year, maybe 4-year trade on this long-term chart that we're looking at. This is not something that it's just going to be over real quick like, okay? This is going to be something that's going to be ongoing, and it's going to be interesting to see how it plays out to everything I talked about on the opening, which was, these carbon credits, universal income, automation, all this stuff. It's going to be interesting to see who can play back into this, because we know that China is positioning itself all over the planet right now. They're putting they're taking over different ports in Venezuela and all over places. Maybe it's military ideas, but maybe it's just to really take over all of the distribution of whatever in these places. So it's pretty big. But yeah, so these spreads here, let me go back to so these spreads are pretty big. It's the same thing with the MDY, which is the mid cap. All of these spreads are blowing up. You can see over here on the S&P versus NASDAQ, it's hardly, because there's so many NASDAQ stocks in there, it hasn't had the dominance of like what we're seeing in the Russell and in the mid cap, okay? All right, so we're going to keep moving on. Let me see what I've got a lot of markets to cover today. Let's dig into the dollar, crude oil, and gold, and then we'll polish this end off. You know what? Before we do that, I'm going to do interest rates and the yield curve, and then we're going to do that, and that will get us all the way to wherever we're going to get to. We're looking at right now only an hour into the show, so this is good. So I think in the next hour I'm going to be able to finish all this stuff, and then we ultimately will hopefully be able to get in to do some of the things that we've done in previous shows, like individual stocks and taking some questions, and I will do that later on. All right. Yeah, so pretty big decline from 774, right on an R3 number. So if you're a market grid trader, I hope you caught that thing, because that was awesome. There was actually a couple big trades today, to say the least. So let's go to US dollar and start with the daily, just a quick overview. The dollar's continued to move. Those of you who follow the channel, if you go back probably 3 or 4 months ago, it looked like a major bottom was coming in the dollar. And then literally from right before the election till after the election, this thing completely changed its tune. You really can't see it here on the daily chart, but if we go over to the weekly, this pattern right in here, let me draw this in. So when this thing was setting up, this looked like, to me, I thought we were going to move up toward this 200 week moving average. We got fairly close, and then it went sideways. I still thought there might be a move higher in the dollar, but literally, here's the election roughly, this bar here, it's been all down. And my joke has been we went from America first, America last, and what that really means is that what we're, the focus, no longer fighting China, but going and embracing them again is what it looks like is likely to happen. This is going to put a lot of pressure on the dollar. And it's going to be interesting because at some point, if you are, I know we've got some folks in UK and around the planet watching right now, if you're in those places at some stage, if you're owning US securities, it's going to get expensive if the dollar continues to decline. I think we're pretty close. I talked about an 89 handle low in the dollar, so hopefully it'll start to bottom. We saw a little bit of a bid come in. It's already dissipated from what we saw today. So the realities of all this is that we've got a lot of acceleration on the downside. We got PPM1 at 0.49, PPM2 is negative, and PPM3. Two of those three indicators are in downtrend mode. So that means there's a lot to go before we're going to see anything happen there. We go over to the monthly graph. This is pretty much our last hope here, is this 200-month moving average that's coming in. That number is at 86, 87. So I said 89 handle, it's 86 handle. That's kind of the drop dead moment. If we trade down below 86, then you're going to see a massive acceleration, and maybe the dollar really start to come apart in a big way. And at some stage, that's going to affect just about everything. And so if we think about it, things I've been talking about today is something that's important to think about, is demonetizing the entire, the dollar. There becomes so many dollars, they print so many of them that the value keeps going down. And there was a time in the past, 20 years ago, that the dollar was under a lot of pressure, and my comment then was you can't discount the dollar to zero to keep the market going up. And those are the things that were happening at the time. So we're going to get to that. If we get below this 86 handle, it's around 80, what did I say, it was 86 and a half. Let me just get here. It is 86, 87. So really below 87 handle, you're going to get in trouble as far as the dollar goes. Yeah, so I see the story just came across here is that evidently there are, they've entered the court, the U.S. Capitol. So, yeah. So I am going to say it, okay? One of the things that I think is the scary thing is when you get the left gets mad at the world. Obviously, they burn cities down and steal large TVs and Nike shoes. when the right gets mad, they attack the government. And this is the scary part of what's going on right now. I'm praying for our country right now that this stuff gets under control really quick, because it's very easy to get out of control, because the right just looks at things like, you go to the extreme right and you look at Timothy McVeigh blowing up Capitol buildings, So my concern is that this thing gets out of hand. I'm hoping that doesn't happen, but the fact that they've stormed and went inside, that kind of tells you some of that stuff is probably starting to happen, which is not a good thing. In fact, even the AT&T explosion the other day, I think, was motivated maybe by the same faction, which is a scary part of the extremes of both sides of these things. So anyway, I just needed to say it. When I see this kind of story, it's kind of hard not to react to it. I'm certainly not condoning it. It's actually very, very scary what's going on right now. So there's a lot of folks upset right now. So let's just hope something comes to get peace back in order. But the Dow, so this is most likely why we're seeing all of these things that we're seeing happening. And we're going to go through gold in a minute. And gold's a bit off of its lows, nothing big. Yeah. Okay, I'm just looking at the chat line, just see what's going on there. Yeah, interesting times, folk. Okay, so let's continue to dig through. So we talked about the Dow. Let's go to interest rates. And I've got the monthly up here. Let me get off screen here a little bit and just take a look at what's going on here with the. I'm going to start with bottom up. So we're going to look at the daily. You can see we just gapped through the market grid today. This thing is just breaking out huge. And, the high so far today has been 1.05, basically 1.05 and a half. I'm going to show you, I think we're going to a minimum between 115 and 121, and then ultimately probably 1.75. Now, you think about all the debt. This is why probably MMT has to be the tool to do all the things that we're seeing happen here. And that's going to be the place where you're going to see, that's where we're going to have to watch closely, because the Dow, the MMT, none of this stuff has happened yet, by the way. It's being perceived to happen. So you've got the old buy the rumor, sell the fact in there as well. But we're looking at, and I talked about this, I think, several videos ago before I went on break. And this is something that we really have. This is something that we really, I guess, have to watch closely as well, because if the cost of debt goes up, there's no option but to print money and to fill up all this stuff. So this, this whole explosion that's about to happen in these markets, I talked about the S&P earlier going to, 4,500, 42 to 4,500. And I'm talking this year, not 5 years from now, right? So there's all of this stuff that happen right now. We're seeing these massive shifts in these markets,
and reconfiguration of everything. And the MMT will have to be the tool, because you're not going to be able to finance debt. If you get up over around what I just talked about, 175 plus, it's going to be very, very difficult. And it's also going to ultimately cause all kinds of issues with real estate and everything else. And right now we've got forbearance, a lot of stuff that's been happening in the last year are starting to come off the tables as well. So we're getting into that firestorm, and people are going to criticize me because my thumbnail on last night's videos were entering in the cautious zone, and then we blew up, but and the S&P goes up 600 points, and Russell goes up 4.5%. But that still doesn't mean we're not in a cautious zone. The fact that markets are going there, I still think we're moving into some of these dangerous things that we're seeing here. But it does look like a lot of things are going, and these trends are going to continue. When we look at the weekly chart here on the 10-year, now we start to see some of the potential where the long-term 200-week moving average is up at 2%. Now that's dropping. I think we're going to get close to that number. It's potential. There's some numbers on the chart. Bear with me 1 second. Okay. And I figured that's what was going on. I put the wrong screen. Yeah. All right. Bye. So after that all those great things I was just telling you, I guess you didn't hear when I put the screen back up. Thank you, Jay, for helping out. Yeah, it should be fine now, right? Yeah, I'm not sure what happened. Are you guys hearing me now?
Okay, everything should be back on. You should be able to hear me now. That's a shame, because that was some good shit I just said. Yeah, just checking. You should be able to hear me fine. Okay. Man, that was some good stuff you just missed. There's no way for me to regurgitate that stuff. Okay. Yeah, let's just, what I was talking about here is on the 10-year, what we're looking at is, my expectation is we're going to move up toward this 200-week moving average at 2%, probably 175, 2%. It's a longer-term projection, but they're going to have to use the MMT, they're just going to have to create money. They can't borrow it, because the cost of money starts to go up. It's going to screw up just about everything that you can imagine. And what that means is real estate, a lot of things. We got all types of elements that are coming into play here that are going to cause a lot of disruption. And we could see just a blow off top here. Who knows? Well, somebody said, will the market crash in 2021? Good news is, because of the type of analysis I do, I'm not saying I'm going to predict that. There's no reason to predict something like that, because last year when the market crashed, we were already net sellers. We were already moving the cash. We're going to have elements. The database will tell us everything. Like I said early on, we have 80% of all of our stocks are still long on an intermediate basis, and about 65% on the shorter term basis. It's going to be interesting, is I haven't brought up the database yet. I think I'll do that before I move on to gold and some of these other things, but I want to finish on interest rates here. But we're breaking out on interest rates above 1%. We stay there today. We're going to move toward 120. So I'm not sure what you folks have heard. So I'm just going to recap all this stuff. We're going to move between 115, 120, 121 on the upside. Ultimately, down the road, we're going to see 175 plus. And at that stage, it starts to become prohibitive of actually borrowing a lot of money. So they're going to have to print it and make it up, not borrow it. So the Fed, as I've said earlier, Powell's told us they got lending powers, not spending powers. You got the fairy godmother. You got Janet Yellen coming in to the Treasury. She's going to spend, make sure all the fiscal. You've got, it appears you've got the Senate, everything lined up just to spend, spend, spend. These folks are just going to do whatever they're going to do, and we'll have to see what the effects is. As far as predicting a crash, whatever. Harry Dent has been predicting a crash for about 8 years. It's amazing that guy has any subscribers left. But you don't need to predict stuff like that, and especially when you live in a quant world like I do. We're watching everything. We're watching 16,000 items. We're not watching one index. And when when things happen, there's going to be a heads up. If it's a black swan and it flips, we're going to know that too. There's no way to predict these things. And the only thing you could do is what J.P. Morgan said back in the old days is, they used to ask him what he thought the market was going to do. He said fluctuate. And his other statement he always said was one of his big problems was he always got out early. So that's something that can happen as well. So anyway, we'll continue to monitor things. I've been doing this a long time. 87 crash, believe it or not, was very predictable. Jay could tell you, I had a nice, pretty 1987 black turbo Porsche, and that was all because of the crash. That was my crash mobile. My trading assistants used to call it the Batmobile. It had a car phone in it back in the day when you had car phones. But anyway, this stuff is predictable, and it's more of responding to change than trying to predict change. That's the hard part. But we are, like I said, I showed you there's no better way to call a top than to say it's going to 4,500, right? That's a good way to call a top. But that's what all these things are telling us, and there's not a lot to dispute that at the moment, in spite of some of the turnaround that we've seen here in the last hour. I mean, the S&P is now up 27 at 54. It got up to almost 80, I think 77 and change. It traded at R3, and we've backed off on the composite now. So it's there's a lot going on for sure. Okay. So why aren't I talking about the important stuff happening right now? Not a political show. I don't know. What am I supposed to be talking about? Help me out. I'm talking about markets and long-term. This is an outlook call today, talking about what's likely to happen moving forward. So I guess you didn't get the memo. That's okay. Yeah, I actually have a video of the trading I did in the flash crash. So back in May, way back when, what was that, 2011? Yeah, there's a video I put out there of all the trades I did. It was kind of an interesting day. Okay, so yeah, and I agree that next should be gold. So let's go to gold. I think that's valid. Gold got a reversal. This is a weekly. Let me go to the daily. I've been talking about gold topping out somewhere between 1950 and 1968. We printed 1962. If we look at the last night's high, 62.50. Now we traded, the low was 1902, so we went right down to the 10-period moving average here. PPM's rolling over. And what I've been setting up on the channel every night on gold is that we're not going to break out here. 1962, 68, whatever the number, we're not going to go much higher than that, and we're going to enter into a broad range. I had no idea that we would drop, 60 handles, and now we're bouncing off of those lows. But this is really the setup zone, and I think probably 1880, 1960. I laid out some numbers in last night's video. I talked specifically about the range. I thought once we completed this little move we did that we were having, which we've obviously done, now we go into a sideways choppy range. But we look at, and I've been talking about, I think, a longer term bottom setting up in gold. I still think that's valid. We did spike above the weekly RTX number. All of that's good. PPMs are all turning up. So this is the beginnings of a intermediate and longer term bottom in gold. And the objectives ultimately will be for it to go and make an all-time new high. Let me just make sure I get this number right. Yeah, so on a big chart, we're looking at 50%, 1928, and then 0.618 is the number I've been talking about for the last week or so, which we almost hit exactly. We hit 62 instead of 68. We got the reversal from there. So there was a decent trade, and if you happen to play it out, the range that we saw several weeks ago at the 1767 level, the target was was 1766. Okay, so let's go to monthly. Monthly chart is set up pretty good. We'd still have some strong upward momentum. This pattern, the 10-month moving average, is going to be the dominant way down at 1872. So any move down to there is going to be your buy point, especially with a 1.48 ppm. That's going to tell you that's going to be your buy point. But we're going to stay for a while. That's going to be your extreme. 1888 to 1968 is going to be the numbers to watch. and the trade between. And I cover that market every night, and so you'll be able to follow that on the channel. Yeah, I think that's just a misspelling maybe on RTX versus RXT. I think one is RTX or RXT and the other one's STX. It should, but I've been doing, it's been wrong. Yeah, yeah, exactly. Yeah, so the STX buy, let's go back to that. Yeah, so you've got potential STX buy, and all that's going to tell you is we're going to move it back into the range, which would be maybe 1948, 42, 48. So there's not much there. You're going to have to be nimble and quick if you're trading that stuff. Okay. All right, before we go forward, I do want to go over to WaveTech for a minute because I want to set up this this bullish database. So in the database right now, 16,392 symbols, 10,000 of them are long. This is on a short-term basis. This number here needs to hold 62%. If it drops below 62, that will give us some short-term danger. Chances are if we hold some positive numbers here today, that's going to be that if we can, we might see some buying. It's going to be interesting to see what type of things come out of this. And when we go over to the weekly, this is what I was talking about earlier. The weekly is 77.9, so 78%. There's 12,770 long signals or uptrends, only 3622 that are not. And for the most part, we've continued to get some slight positive rotation in the database from that standpoint. But yeah, so those are things that you're going to want to keep a close eye on. Okay. Let's go to Bitcoin. I think it's time. There aren't a lot of things going on from a technical standpoint. It's tough when you get to this type of range, but we do have a daily RXT sell signal working right now. This chart rolls over at midnight every night, so midnight Eastern. So what it suggests is that we're going to go into a sideways range. If we just look at the grid itself, what is that range that it's projecting? The extreme is 39,937 and the low 30,000. So this is just the total range. But so far today, we've not quite made the highs 35,837, R1's 36,490. So this thing here will stay elevated for at least 2 more sessions, and then it will start to do a contraction here just in a little bit in the next couple of days. So the cap is probably going to be up around 37.6 for a short-term level. But if we go over to the weekly, we got a weekly RXT sell, so it's going to be interesting to see if on Friday we can close lower than where it closed last Friday, which was 33,349. And that doesn't look to be in the cards, but as we look at the market grid for the week, we're looking at 36,617. So we've not quite made R2, but we've traded above R1, which is 34,890. We'll call it 34,9. So we have traded above R1, S1 31,806. The low is way down at the STX number, so it's been a huge range. So what this is telling us is that we're likely to go into a sideways mode, and these ranges, we're going to see massive ranges between 28 and 3,600. So, look for a lot of plenty of volatility. And just going to the monthly, there's not a lot of data on here, but there's enough to at least get an idea. From a monthly standpoint, we've actually on the market grid, 36,631 is the RXT number. So that's pretty close, 35,837 high. So that's for the month of January. So we've got a long ways to go for that to hold. But expect to see this ranges really be the setup. We've seen this type of activity in Tesla and some of these other areas as well. Okay, so let's do this. I think I covered everything I wanted to cover from the standpoint of all of the markets. I don't think there's one market I want to cover, which is crude oil. Let's do crude oil. That's part of that recovery trade. So we're looking at crude oil. Got an RXT sell yesterday. It's still higher. These RXT sells, what they suggest is just a minor sideways to down. So that doesn't mean they can't make a new high. It's not like a sell signal, although sometimes, depending on where they are in the sequence, they can come in. Now, these dots that you see on the screen here are actually cycle lows that were signaled here. So there is some cyclic influence coming in here, but the range so far today has been 49.49 to 50.94. We look at S1 49.42, and we've been just basically S1 R2 on this thing today, but these PPMs are all very positive, plus 0.44, 0.36, and 0.69. So all three of the short-term indicators are in trend mode. Let's go to weekly. Weekly, we're trading up at the upper end, 51.24, 50.60. We've traded in between R3, RXT, the extreme, but the PPMs are all very bullish. I think we're going toward, I mentioned in the commentary last night that we're trading above 50, but on our way to 60. We should at least go up to that 200-week moving average. And ultimately, this chart here, the monthly chart, will come into play. And the monthly chart suggests that the 40-month is also 60.35. The 200-month moving average is way up at 110. That would be, I think, a little bit of a stretch, but we should see at least that 60 number come into play over the next couple months, I would think. And that's going to have everything to do with everything coming back online. Okay, see where we're at here on everything. We got about 45 minutes to go. Like I said, I think I got through everything. I think what I want to do here is just take a couple minute break, and we will come back and we'll start to maybe do some individual stocks and some of that stuff. But give me just a couple minutes. Yeah, before I go on, I'll bring up the these ARC stocks that we put together. Yeah, you know what? Yeah, I'll cover lumber when I come back. All right, give me a couple minutes, folks. I think what I'll do is I'll put on just a little bit of music, and I'll be back here in just a minute. All right, folks, I am back. Let me know you're hearing me so I don't do another rant without anything behind it. Yeah, you should be able to see and hear me now, correct? Yeah, so anyway, so somebody was asking, that's actually an old bandmate of mine, a song that he did. So, yeah, the Mad Ants, Joel. Yeah. Yeah, anyway, so yeah. Let me get some paper ready, and you folks try to come up with something unique. I know you want me to cover Apple and Tesla, but why don't you give me some stocks that I can cover, and we'll do that stuff. In about 15 minutes, we'll just see how this thing's going to close up. So hopefully you guys are hearing me, correct? Okay, yep, you're hearing me. Awesome. Okay. Yeah, the reason why I play that music, because the artist has allowed me to play. I've got their whole library, so, including some stuff that I played with them. So, anyway, all right, let's, yeah, so Don, I'll go through ARC. I'll go through that first, actually. I'll go through ARC W. I think we have that. I don't want to get too deep into that, but I think that'll do it. All right, hold up I got quite a few folks to go through, so it's going to keep it business. And I'm glad you can hear me well and actually even see me. So, although this camera seems to be kind of tweaked a little bit. So, anyway, so let's go ahead and look at some of this stuff. I said I would do ARC W. So, let's see if I have, well, I've got ARC G here. I don't know if I have an ARC W. Let me look here. I've got everything but W, which is interesting. What I'm going to show you here is a couple things, and we'll go through some of the stocks. Like we did I believe this has got. Let me look at here. Yeah, so this is a top 10 stocks from ARC, and we built a portfolio with these. And the interesting thing is, and I know some of these numbers are somewhat small for you to see, so I'm gonna attempt something here just to see if I can get this to work. Yeah, so you can see the annual rates of return. It goes back to 2017. Hopefully that helps you to blow this up a little bit. I'll go through a couple individual stocks here, but these are the annual returns. Last year, 170.63, and this is just the top 10 from ARC and the ARC G. I know we have the W's. Jay could probably pump that over to me on Skype, but I have the video together, and a lot of these, there's a couple things that you can do. Don, you're asking questions. I think you are a subscriber, correct, of WaveTech? Yeah, so, but all of the I'm not going to go through an ARC presentation because I have that. I used to, a lot of people, was never been a Warren Buffett fan, and I was never, I'm trying to remember this guy's name that ran the Magellan Fund, but he basically bought every stock in the stock market and went up, and everybody thought he was smart. Pretty much what's happened with Kathy is these strategies, she just happened to be at the right place at the right time. So the ARC funds are really popular at the moment, and really all that's happened is these disruptive stocks have come into play, and they will, maybe she can keep picking good stocks long term. That's what we get to see from her. The good news is, like I made a comment, like right now, if I go over to the active symbols that we have in here, let's see here. These are the symbols that we have in. If you can see this blown up screen, these are all the ones that are in there at the moment. And the good news is that she actually has the ability to has the ability. Let me move this down. That's what's going on here. Yeah, so it has the ability to rotate these symbols. So these are the list of stocks that are in G that we're watching. Some of these have been long for a while. If we go to the open positions page, this is all that we own right now, which is CDNA, MCRB, NVTA, and PACB. So those are the things that are on the books right now. You can see the returns, the percent of the portfolio right now, what we've got represented. So that's the other thing with the software. We're able to rebalance a lot of stuff that she's doing, and we have something in the software called dynamic profit harvesting that actually causes some acceleration and capital the way that it rebalances. So right now in this particular strategy in top 10, we've got 50% in cash at the moment. So it's somewhat interesting on that one. But it was up, what is it? PACB is up right now, is up 376%. So that's been a trade that's been on for a while. And entry date 8/17/20. So that's a big, that was the last move. But if we look at, yeah, so you can see this is the longer term profit and stuff like that. Anyway, so let's go ahead and let's dig into some stocks. So there's some ideas for you that you can jot down. Before we do this, I said I would cover lumber when I came back. Lumber has skyrocketed again. It basically went up to 780. And now it's been up to 806. It's pulling back a little bit. This is the weekly, but this uptrend, the housing market, I don't think is going to roll over just yet. It's possible, depending on what goes on here, it's possible. Okay. Yeah, Jay sent me the ARC-W list, so thank you, Jay. But lumber is, the housing market is not going to go away. There's a mass exodus. I was just in the Austin, Texas area last week, and I can tell you what's going on in Austin. It's been going on for years, but it's still just going crazy, especially in Northwest. Of course, Elon Musk, Joe Rogan, everybody's moving to Austin, right? And so, but yeah, so that is the X's. Everybody going from the cities to the burbs. That going to continue, and it's actually happening, going to the next level. It's not the burbs anymore. It's to areas like where I'm at right now, which is up in the central Arizona in the mountains, and it's just crazy what's going on here locally from that standpoint as well. So, yeah, there's just a lot going on. A lot of California plates around here. That's all I can tell you. And I actually drove on I-10 from Arizona to Texas in the last couple of weeks, and on the way there, it's a guesstimate, but 60-70% of all the plates I saw on I-10 heading east was California plates. On the way back, it wasn't that way. I thought it was interesting that it wasn't. Yeah. Anyway, so there's a lot of folks heading to Texas. That stuff is real. Yeah, everybody is leaving. You're right, Brian. Yeah, it's kind of crazy. So let's dig into some of these stocks that I wrote down. Some of them are typical things that we look at every time I do this stuff. This Planter Tech, this is weekly. There's not a lot of data here, but we did get an RXT sell over here on a weekly basis on the 27th, and we basically are locked in, and this is what I call a dragon head, and a dragon head's never good. It's not necessarily super negative, but what it does, it sets up the tone for a massive consolidation, and this thing is still drifting lower. It has not went below that initial low that we saw back on, when was that, on 12/4. The market got down to 21.15. What's the low here? 22.50. So it's retesting that low after a few weeks of it going up. As far as coming up with anything, we have to go to a daily. Might be able to figure out something here. There's just not a lot of data on this. On this platform, I could actually bring it up on our platform. We'd have a little better data for the PPMs. But this is, yeah, so this is trading down at the 40-week, 40-day moving average. Looks like this thing wants to move lower. PPM's negative, all that kind of stuff. Going from there, I'm getting I'm getting all kinds of text messages on everything that's going on out there right at the moment. But yeah, so not a lot there for me to cover. Soon there'll be enough data there. This is NVTA, similar kind of pattern. It got a bit of a dragon head up here. We drifted lower. Looks like it's trying to set up a bottom. Let's take a look at the weekly real quick here. Yeah, got a lot of work to do here. There's still another multiple weeks. Probably have found at least the lower end of the range around 41. That's probably going to be your lower end, but you're going to have resistance between the 10, around the 10, which is also that's 47. That's going to be right at R2 on a weekly basis. So it could trade back up in RXT into a 50 handle or something like that. Doesn't look like anything exciting here. And this goes back to what I was saying earlier in the broadcast, is that it's important for us to pay attention to some of the things we're going to see coming out, which is going to be where cash flow is going to migrate, whether it's by sector, by industry group, or what companies are going to come into play. So that's something I'll be looking at as well. we'll go into, guess we got to do a vaccine stock. So we're looking at Moderna. We're looking really at probably at the extreme, but we've got the dragon head, which just tells us there's a lot of sideways movement. Nothing really here. This is weekly. On a daily basis, maybe there's a bounce back setting up, maybe a low, but you're going to be capped out around 134 maybe. 127 and 134 is going to be that 40 period moving average rising in there is going to pull you up towards 122. So there could be a bit of a play off of these lower numbers that we've seen here around 110, right in this level between 114, 110, maybe a move to 22 as high as maybe even getting back up toward that 134 level is possible, which would put us back at the 21 period moving average on a daily basis. Well, here's another one of these future fuel. Let's go to weekly. It's blowing through today. Kind of goes to the theme that I was talking about, right? I still think I mentioned the book on earlier, Natural Capitalism. They were huge on hydrogen cars, not electric. And there's still, I think, a play there for some of these. I'm not sure what Future Fuel Corp does, but I suspect maybe if you can tell me what they do, but I'm guessing they're probably an alternative fuel. And the real promise, I think, is in the hydrogen cars. I really think that's it. So we'll see. But anyway, as far as this thing goes, it's just kind of blowing up, but it's really in this broader range. Maybe we can go to a monthly and figure out something. Yeah, so kind of, yeah, this is one of those patterns where you're probably trading at the upper end, a lot of resistance, probably going to be some stock for sale up here, and you want to trade down into this, it's probably locked in 11 and a half, maybe 10.50, $14 range. That's going to be where you're going to be locked there. Here we are at NVTA. This was a rocket ship. We did get the RXT sell way back in 831. We've went sideways since. We've set up this dragon head, and it just got a lot of work to do. You're going to want to watch that 10-week moving average, 459. It's coming up about 20 handles a week. That's going to be a point where you're probably going to be able to buy for a bounce off of there. But it's going to be limited up at these higher end we'll call it 557, 576. Maybe it gets up to 593 RXT, but that top end of this grid isn't going to change much right now. So there's going to be a lot of resistance. So if you do see an opportunity to buy against the 10, you could try that there. Just keep a reasonable stop on that stuff as far as that goes. I've seen this one mentioned before. This is a blockchain, RIOT, R-I-O-T. Maybe appropriate to put that up with what's going on right now. And the we did get an RXT sell. This is monthly. Let's go back a step here. Let's go to weekly. Yeah, so weekly, you're just skyrocketing. You're printing up at the upper end of the ranges. So if you own this, congratulations. Hopefully you own it right. And, you are setting up the beginnings potentially of like a dragon head, which means high level consolidation and moving back maybe toward 1590, 1470, something like that. You're probably capped out on this thing right now. Yeah, good old, I haven't seen that name for a while. Glow, GLW. Yeah, that's the name I haven't seen for a while. That was a big internet play back in 2000 when they were putting fiber everywhere. That was a big play back in the day. Let's go to the daily. Yeah, breaking out of the range today. The grid will probably be a sideways trade. Go to the weekly. Yeah, we're trading up at the upper end of the weekly range, so you're probably played out there. But from a longer term standpoint, this thing's trying to turn higher. And I'm going to relate this because because of the long talk that I had earlier about the new elements that are coming into the economy. These are areas that might be in play: internet expansion, whether it's whatever, smart screens, whatever is going to happen there. This could be a company to watch. And that's one of the things, like I said, I want to develop some themes around where this rotation is going to happen, whether it's sector, group. I think it's going to be more individually based, where you're going to have to start putting together and basically maybe play out like a Kathy Wood scenario where we build some forward-looking. There's probably two types of trades in the small and mid-cap area, and then the other one is actually playing into those scenarios that I talked about. So if you didn't see the beginning of the first half hour of this live stream, which was almost 2.5 hours ago, just make sure, actually almost 3 hours ago, just make sure that you go back and watch that first 30, maybe 45 minutes tops. There's a lot of things I talked about there, and those are going to be industries and things to pay attention to going forward. That's where I think some of the new ideas that are going to come out that aren't already played out at extreme levels. Possibly, I'm just going to flash over here on Glow just to go into a monthly mode here to see from where this came from. So yeah, so this stock's already doubled plus. I had an old friend of mine used to always say these stocks will double, they'll usually double 3 times, and then you can find something new. So this probably applies to a lot of these stocks. Some of the stocks like Tesla, probably 4 baggers on the double. So you keep doubling. So maybe it's 3 doubles now, or maybe 4. So, and that's typically where these companies get very mature in price, and things of those sorts start to happen. Yeah, so markets have stabilized as far as that goes. Yeah, I didn't cover this earlier. I thought I had it up here, yeah. So this is monthly on Ether. Let me just back this up a little bit, and let's go to the weekly. This thing just blew up this week, and there's, let me just look at something here. Yeah, so it's interesting. I just put some Fibonacci objectives up here, and the top end, this goes back in on 10/23, there was an upward objective for Ether to move. If I look over, bring this box up over here and scroll down, the extreme target on upside was 958. So we blew through that, obviously up here at 1215 high. So this thing's just going off the map, and I think this also has to do with everything that I talked about in the opening comments, is that, you know, Bitcoin and all the cryptocurrencies are going to start to come into vogue, I think, really good. Somebody asked me where, you know, I think we could see 43, 47 on Bitcoin. I really haven't done much work on Ether, but, you know, it easily could go to, you know, a couple thousand. The play, I think, maybe is in maybe Litecoin and Ether were the really big plays. If we bring up Litecoin here, you see that thing has just went vertical. It's got a long ways to go. One of the best trades I had in Litecoin a number of years ago was I had a target of 240 something and almost nailed the high on a previous run, and bought it like at a quarter, something like that. So this thing is got working on a weekly RXT sell. But what happens with this grid, when you look at any of these, no matter what it is, when the grid's going to turn up, it's going to expand. The last three bars have higher volatility, so you're going to see an angle on the grid move up, and then the market will move sideways into this if we stay here. This is our weekly chart, so it needs to stay above. Let's see what that number is. Looks pretty likely, but this stuff's so volatile, you don't know. 152.90, so a close over 152.90 will set up more or less a sideways tone. Doesn't mean it can't still make higher highs, but it's going to get into that next grid level. So maybe next week at the live stream we can cover that at that time. Yeah, somebody's going, are you afraid of buying stuff that has gone vertical? Typically, yeah. There's no point in it, I guess, unless you have some understanding what's going on. When Bitcoin went vertical at 23, I mean, that was the beginning. That wasn't even a real target, right? So you can play this stuff. You just have to have some good strategies around playing a vertical market. They're tough. Yeah, yeah. I was talking about that. I don't know if what is it? Red Hop EXP in the UK. That's one of the things I was talking about with the dollar weakness. You're gonna ultimately there's not going to be any way to play this. The only thing you can do if you're playing from offshore is to hedge that. And if you have a small enough contract or something you can put on that would be, like a dollar short, or, something to offset, maybe utilizing something like that where you can offset the dollar weakness. It works both ways though. So you have to do a ratio spread. This is way too complicated to do on a stream here, like at this moment, but maybe only put in 25 or 50% hedge on that. Yeah, Gary, I can't do wheat. I actually used to get the CBOT. I don't get it anymore. I don't know if there's an ETF or ETN or something that you might know that I can take. I'm glad to look at it. I just don't have access to the CBOT stuff anymore. All right, we got about 10 minutes to go. Let's flip over and take a look at some of the stuff as far as the futures go here. Let's see if we can watch some of the trading. We're seeing a little bit of selling come in again. I want to just talk a little bit about this. Okay, what is... I see some of these commodities. Yeah, so I don't know how many of you folks have ever read Reminiscences of a Stock Trader, but back in the day, we've come back into that place where there's securities that can trade these commodities. So let's see if I can get any of this stuff to come up real quick. Yeah, so here's a WEAT fund. This is WEAT. This is what, a weekly? Yeah, it looks like this thing, I don't know much about this. I'm just looking at a raw chart here. There was some cycle lows coming in over here. It looks like we're trying to break out. We're above the 200-week moving average, which is somewhat good. Let's take a look at the dailies real quick. Yeah. So I doubt if we have this in our system or not. I just want to just look at this real quick just to see if there's... Yeah, we do actually have it. Okay. Let's put this on optimized daily, see what we get. Yeah, so we did pick up a buy signal here. It's been kind of choppy as far as the trade. It's got a poor rating on our system. Let me get off screen here so you can see everything. We did get a buy here on 12.15 on this thing at 5.84 or so. So that's interesting. Let me see if we have this other one. Yeah, we do have the soy as well, and probably on this we're going to have to go to an intermediate trade to get something decent. Yeah, so on an intermediate level, let's see if there's anything here. Yeah, it looks like it was bought way back at 14.23. Actually, 13.70 was the buy back on July. So that was a pretty good buy on the beans anyway. But let me bring this up in TradeStation, then we'll focus in on the close. Yeah, so interesting. We did have some Fibonacci projections here on this stuff for a high target 1945 to 2074. So we basically we've traded right into that level here. Looks like we exceeded it right here, high 2038, and that high objective is 1945. So yeah, we traded right into these price objectives that came out of this trough. So this was projecting for prices back on 12.8 in December for it to move up to these levels where we're at right now at this between 1945 to 2074. So we're trading right in there at what's the middle one, 2025. So we're trading right at the yellow line at the middle price objective. PPMs are all pretty positive, actually. Still a lot of uptrend there. You did get an RXT sell, so we're probably going to go into a sideways range on that. So what do we got? 5 minutes. Let's focus in on the end of this stuff here. This is interesting. I want you folks to see this chart here. This right here is showing that the liquidity on the close is absolutely non-existent. Whenever you get a look like this, there should be a bell in here, and we're not seeing that at all, and that's really concerning. So there is literally, with 5 minutes to go, there's no liquidity, and if you watch the far left of the screen here, you're going to see that it's going to be pretty volatile, trading in maybe 200-point ranges. It's just going to be flopping all over here. There's just no. This is very interesting. There's just no liquidity at all as we come into the market close here, and we're at 20, only up 20 now. So we dropped about 4 handles, and yeah, here's 38. So there's no liquidity here. It's starting to come back a little bit. You notice that the bars over on the right are starting to fill in. You've got this big spike up. There's a big, not very big, fairly big, but look at this. It's just declining here. We're now 35, so we're up 17. So it's going to get, I think this is going to be somewhat of a crazy close here. We got about 3.5 minutes to go. So we'll just stay with this screen to watch how this thing's going to close. Should be plenty of volatility. So what do you do if you're fund manager? You're trying to balance this thing out right now. If you look at the far right, if you can see these numbers good, they're just very small numbers. 45. Look at this. We just jumped to 41. We traded from 36, 35 to 41. And once again, no liquidity. This is an air pocket. Some liquidity is showing up right now. You see these bars starting to fill in. But still, these are very small numbers. Now we just, yeah. Yeah, this is going to be interesting, folks. We'll see how this plays out. We'll see if, we'll see if there's a buy or sell bid that's willing to push this market around. We just saw there's that number above, that big spike up was 500 contracts for sale, and it went away. It was a flash offer. So there's a lot of game playing going on with the machines at the moment. We're back at 43 here. Liquidity is starting to show up a little bit. These bars are filling in. Now they just kind of come for a minute, but none of these numbers, 35, 40, especially if we come in, we're in the last 2 minutes of trade, and liquidities like this is somewhat scary. You see this one bar floating around on the right-hand side. That's not a good sign. Now we're lit up again, but these are small numbers. Right now we should be seeing 200, 300, 400 on a bid and an offer, and we're seeing 40 and 60 and 17. This is a pretty illiquid close that we're coming into from the cash market anyway. Just about ready to enter the final minute. Okay, we are in the final minute. Liquidity still very light. This is where all the fund managers and everybody, ETFs, mutual fund guys, are squaring up in the last few minutes here. And we'll see some activity, but there's just nothing out there. Even though the bars are filling in over there, we're still looking at small numbers, 35, 15s, I mean, very small. $39 handle trades. Yeah, now we saw a couple 400s, but not much out here. Really small numbers, There's your bell and the end of the session. And as I always talk about, if you're watching, you want to get a feel for the market. You want to see what kind of activity comes into the last 2 minutes and the 2 minutes to follow. And now we're seeing some liquidation here. We're trading down to 35, still no liquidity at all. This is kind of scary if you've got some size you need to get done. And they're pushing it way down into, this is new lows, down to 33 handle. So if you're a fund guy and you're trying to figure out what to do, that's a scary thing, because there's no liquidity out there for you to get any size done. We did 2 million contracts during the day, and now there's nothing out there. Still trading down, now 33 handle. What did we get too low here? Get down to 30. So that was probably, we got 1 minute, we're in the second minute here. So there's a lot of selling after the close, which would indicate there's some liquidation coming into the markets on some of these funds and what have you. So anyway, just want to thank everybody. I hope you found today's show really interesting, because there was a lot of stuff I covered early on. If you haven't seen if you weren't around for early in the show, then go back and watch the rebroadcast. I'm not sure once I end the stream how long it takes, but that's it. I'm getting badges here. Dow Jones jumps 400 points at close. Escalating capital protests. There's, I guess there's a lot of stuff going on. Yeah, be interesting to get caught up with the news as we go. Yeah, I appreciate everything, folks. I just hope that hope things stabilize here. Doesn't get too far out of hand. It's going to be I think a real tenuous time, and as usual, markets don't care about anything. Not sure what we saw today. Like I said, I feel like it was almost the same kind of action after the presidential election. We came in and there was just a solid bid there. And, I have some theories on what's happening there, but it's, yeah, I think there's definitely some manipulation going on. And you're welcome, everyone. I really appreciate everybody staying on, hanging out with me today. Sorry about the sound issues. There was a couple little glitches. I'm gonna delete those setups so that doesn't happen ever again. So I can't even go to those pages. I'm not sure why they're there. But anyway, you guys are welcome. Just remember here to take a look and maybe do a trial on WaveTech or PX and support our channel, support our efforts here, help you manage your money, all that fun stuff. It's what we do. So really appreciate it, everyone. I will talk to you. As those of you know, I think it's in and out time. It's time for a burger. Yeah, time for an in and out burger. All right, folks. Have a great day. We'll talk to you real soon. I'll leave you I'll leave you with this to go and sign up, and I'll put some music on for a minute so you can sign off with that. All right, folks. Have a great day. See you on the video tonight.
Same old story, but it feels like the first time. Such a sad, sad day. Changed my